The validator as a software factory. Jito Restaking just turned every Solana validator into a modular software factory. For years, being a validator meant running a single monolithic client to produce blocks, but the launch of Node Consensus Networks, or NCNs, changes the fundamental unit of work on the network. We are moving away from a world where validators simply vote on ledger state, and toward a model where they sell their hardware and economic security to specialized applications. This is not just another layer of yield. It is an architectural shift that unbundles the validator's responsibilities into discrete, rentable services. NCNs, the modular task layer. Network Consensus Networks are the modular engines of this system. Think of them as decentralized services that sit on top of the validator set to handle specific workloads, like Oracle price feeds, cross-chain bridges, or even the tip router, which handles MEV distribution. Each NCN defines its own rules, its own reward structure, and its own slashing conditions. By June 2026, we have seen this evolve from a few core modules to a fragmented ecosystem of specialized infrastructure. The engineering trade-off here is complexity. A validator is no longer just running Agave or FireDancer. They are managing a suite of plugins that each carry distinct operational risks. This modularity allows for faster innovation in peripheral services, without waiting for a mainnet hard fork, but it forces operators to become sophisticated systems administrators, rather than just hardware hosts. This transition creates a demand for a new kind of accounting, which brings us to the liquidity mechanism of VRTs. VRTs and the liquidity of trust. The Jito Vault program introduces validator relative tokens, or VRTs, to solve the liquidity problem inherent in restaking. While Ethereum has popularized the Liquid Restaking Token, or LRT, Jito's approach is designed for Solana's speed and asset variety. VRTs act as a liquid receipt for assets held in a vault, which can include SOL, JitoSol, or even ecosystem tokens. These tokens allow users to maintain capital efficiency while their underlying assets secure multiple NCNs simultaneously. This effectively creates a performance index for specific validators or groups of nodes. Because a VRT's value is tied to the rewards and slashing events of the specific NCNs it supports, it functions more like a performance bond than a generic currency. This creates a highly transparent market for security, where the price of trust is dictated by the actual performance of the node consensus networks. The rehypothecation risk profile. Restaking is essentially the rehypothecation of trust, and that comes with structural risks that the industry is only beginning to model. On a high-speed chain like Solana, slashing needs to be near instantaneous to be effective, but the complexity of proving a fault in a specialized NCN can create lag. If a validator misbehaves on a cross-chain bridge NCN, the system must be able to burn the underlying stake without compromising the security of the main chain. This creates a double-edged sword for capital efficiency. While the 21 shares JitoSol ETP launch earlier this year proved that institutional interest in these reward streams is high, the actual slashing logic remains the most sensitive part of the code. If the slashing parameters are too loose, the NCN lacks security. If they are too tight, a minor software bug could wipe out massive amounts of collateral. This tension defines the current state of the Jito ecosystem. The signal under the noise. The shift toward Jito Restaking signals the industrialization of the Solana validator set, moving it from a flat network of block producers to a vertically integrated infrastructure platform. By decoupling economic security from the core consensus through NCNs and VRTs, the protocol has effectively created a market for verifiable work that exists independently of simple transaction processing. This means the future of validator competition is no longer about who has the lowest commission or the fastest hardware for the main chain, but who can efficiently manage the highest density of high-value NCN tasks without triggering a slashing event. For analysts and builders, the data that matters is no longer total stake alone, but the stake weight distribution across specific NCN modules. Watch the adoption rate of the BAM Maker Priority plugin over the next quarter. It will be the definitive indicator of whether this modular security model can successfully capture the high-frequency trading flow that Solana's architecture was originally built to serve. Subscribe for more